Well, I'm going to give this a shot. We are in the IJK period. My primary guidance during this period is a 3-period walk, which for me, since I recalculate all of Rob's stats back to March, says that 71% of the time I is the first extreme of the IJK period. So I is barely a bar wide. So it's a little early to determine that. I'll get into why I recalculate Rob's numbers. It has nothing to do with Rob. But the premise is, the IJK progression is, in my mind, one of the most reliable. Monday or Wednesday, Tuesday or Friday, it seems to work almost without a doubt. Now, sometimes the ranges aren't that big, so your trading opportunities are less. But when the ranges expand, and if these walk progressions hold up, this will be a valuable tool. Before I go any further, I just want to probably go over what I've said several times before in the chat. But I've been in the room since the beginning, so I have a context of how much it's grown. And clearly it's grown quite a bit. I think Marlene might be a charter member too. If not, she was in here pretty early. A lot of growth, and a lot of growth continues. And I'm personally encouraged with the participation of the new group. A lot of experience seems to be in our room now, and learning together and sharing together has really been an important part of the growth of the room. But I followed Rob for many years, and intuitively I had the sense that Rob and I thought very similar. Now, somebody used the term snake oil salesman, and if you've been around, and I've been around for a good long time, you've been taking advantage of the participants in this industry that try to sell people on the next best thing since sliced bread. And if you've been taken a few times by some false promises and some fancy charts and marketing, you can become pretty callous the next time you get a solicitation. Well, it just so happens that I made a connection with Rob, had followed him over many, many years, and while I didn't always connect with every one of his ideas, I always felt that he was honest and straightforward, and somebody who was trying to help people. So I always answered his emails. I think I've trialed 3 or 4 of his wild hair ideas over the years, and the oil trading room has really gelled. I've traded crude oil for over 2 years, and I identified before I got his email that crude oil had great range and moved in large, smooth patterns. So I kind of took what I already had. I was a successful and have been a successful trader for a good number of years. And I took and put all that stuff aside and just took it.
Range crude oil, fast line, going flat.
Sorry about that.
30 range crude oil, fast line, going flat.
Yeah, I suppose I could get rid of that if I figured try it. I also have workmen working here, and they've started up again. It is a chainsaw. They're rebuilding my chimney, so they're cutting bricks, I'm guessing. Anyway, I'd personally like to thank Rob for all that he does. I thank anybody who's been here any period of time uh, has a sense that Rob is a honest and worthy partner, and is here to help everybody. And anybody who cashes $1 million profit checks from his trading account certainly knows what he's doing. And I think we all have a sense that Rob knows what he's doing, and I'm very grateful that he's willing to share it with us. As far as what I look for is I've worked very hard to try to identify what side of the market to trade from. One of the things that has worked for me is identifying when it's not the right time to trade. And I think I've successfully cut down the number of trades I've made over the years, and try to trade in the highly probable time frames. Yeah, turn off the chime. There you go. So highly profitable time frames have proven to be A through D. They used to be I, J, and K, not so much anymore. But learning when not to trade is probably as important as learning when to trade. I don't trade pre-inventory very often, or pre-FOMC. I pay attention to the size of the swings and don't normally trade when the legs are very small. And I certainly don't trade inside a larger structure until things break out. But I think one of the best things about Rob's room is that he gives you a lot of information, and he forces you to make it your own. But part of the reason that I recalculate all of Rob's stats is it helps me make it my own. The fortunate thing for me is that my numbers have lined up pretty close to Rob's. So that makes me feel good about my analytical ability, if nothing else. And I tend to like to look at shorter time frames than Rob sometimes. But nonetheless, I'm making it my own. And if Rob called out his trades, we all would have much different results. So I encourage you to make it your own. I guess the other things that have popped up, excuse me, for me, is the symmetry in the market. And we talk about measured moves, not only the last leg against the next leg, but also larger structures. And I'm constantly amazed at all the symmetry that exists if you just are creative enough to look for it. I found that using these as benchmarks, landmarks, targets, whatever you want to call it, has also improved the profitability of my trading. You just tighten it up when it hits a target, or in some cases you just take it. I read everybody's trading plan. I'd like to congratulate everybody who has written it. They all look pretty good. I will comment on it eventually. But one of the things that has really worked for me and has been an evolution in this market is visualizing the trade. And part of that is just calculating a measured move against the last leg, looking at where things stand against the halfback, which is a very important line on the chart, and just making a decision as to whether or not a measured move at this point in time on the chart really makes sense. And visualizing it, I think we did that the other day in K. I try to do that all the time, and that's something that has helped me. I think studying the patterns over and over and over and over again helps you with this visualization process, because you've got to be ready to pull the trigger when you see it in real time. And the only way you can do that is by studying them and visualizing how they're going to play out in real time. From time to time, I am wrong on that. Generally, it doesn't cost me greatly, but visualization is important. It's also important for me to be flat, because being flat gives you an objectivity that you just don't have when you're in a position. Some people are better at it. I think Rob has commented on that before. Some people are better at reversing or changing their mind on the direction of the trade. I tend to go flat because I need time to take in all the information. Well, I has gone 2 bars now, so I guess I have some more filler time. I call it understanding normal. That's when I want to trade, and that's when I want to trade big. A through D is as close as we can get to normal, although sometimes it's not normal. I've also found that the 3-period walk at EFG and even DEF oftentimes can pay off, but understanding normal, and more importantly understanding when it's not normal, is, I think, an important skill. Our stats are based on, for the most part, averages, which to me equate to normal. So if you, like right now, the legs are so small that we have no edge. That might be normal for G, H, and I, but it's not normal for the trading environment that I want to trade in. So I'm just not going to trade. And I call that not being normal, and it's just a period where I see no edge, and I don't want to trade. Now, for me, and everybody's different, winning percentage and average win-to-loss ratio is very important. I mean, there are times when my daily average win rate might be 50 or 55%. Now that's as Ninja Trader reports it. And obviously, if you scratch a trade and lose only commissions or make only $5, that's going to count as a winning or losing trade. And I used to go through the trouble of netting all that out, and I certainly hope Ninja 8 gives you the ability to somehow filter out scratch trades to give you a more accurate winning percentage. But I use what's given to me, and on a good day, I'm 85% plus. On an average day, I'm probably 65 to 75%. And there are days when my winning percentage is around 50%. But for the most part, my win-to-loss ratio is always pretty good, and I focus on that. And I am happy when those both are good. So part of how I rationalize getting to that is picking my spots to trade. And there's one thing that you'll have to realize if you've been in the room for any length of time is there are many trade setups throughout the day, and you just have to, in your own mind, understand which ones give you the greatest edge. And I used to trade quite a bit, but became very frustrated when I would pile up many losing trades. I think Rob's methods allow you to find good opportunities that happen over and over and over again. And part of the process is for you to figure out, when the best time for you to trade. Some people just thrive on making many trades. They have a 30 or 40% win rate, and they make enough money to make them happy, so that's good for them. I'm just explaining to you how I think. I guess the other thing, I'm fairly open in sharing. I'm hoping that any comment that I make is taken in context. I'm not telling people how to trade or what to do. I'm just sharing what has worked for me, hoping that it can make a difference for somebody else. And again, one of the things that I've found to be the best part of this room is the sharing. And Rob puts in an ungodly number of hours. I don't know how he does it. And hopefully a couple of us, or many of us, or even all of us can help take some of the load by finding new and special ways of using the triggers. I'm about as far away from a bloodhound expert as you can get, a little lazy in terms of studying it, and I'm pretty excited about the opportunity that lies ahead of us with the bloodhound group. I turned my dinger off, and I'm not reading the comments because there seems to be quite a few. But I do see one, what's my favorite setup? My favorite setups really have focused on the smart price bands. I have 2 or 3 different setups around that. Most notably is the gift trade. And anybody who isn't comfortable with the gift trade needs to become comfortable with the gift trade. It's a good one. But the trend line, since we have made it faster, has really given you a lot of opportunity. The other thing that I've kind of changed in my thinking, the halfback line is a very important line for me. That and the halfback 1 line, which is the overnight line. That helps me understand the bias in the market and the relationship between those 2 lines, the difference between them. Those are all things that I consider when determining which side of the market to trade from. But since our ranges are so small lately, some of those after-hours conversations with myself, I've asked, what should I be doing different? because we're not getting the 50, 80, 120 tick swings anymore. And part of what I've decided to do is be more aggressive around the trend line, the smart price band. So I am more likely to take a long when we're below the halfback line than I ever was before. When we had large and expanded ranges, I could easily justify waiting for a signal in the same direction as price was to the halfback line, because it was a matter of 15 or 20 minutes and it was going to happen. Today, perhaps not so much, so that's kind of the change that that I have done. But regarding the halfback, I mean, look at today. I mean, there haven't been rejections at the halfback, but you can see a 5 or so tick extension beyond the halfback, and then it's bounced back. I find that the halfback line is something you got to pay attention to. Many days it is very repellent, and I guess the other thing that's kind of centered to my own personal trading method, and of course that has taken a hit a little bit with these narrowing ranges, is I always want to try to trade away from the halfback, looking for range expansion. There's a couple of things that happen a very high percentage of the time, and one of them is that the overnight high or the overnight low is going to be hit in the first 4 sessions of the day. That number's in the mid to high 90s. And the other thing is that range is going to expand. Price opens on the 0 line in A, and I know I've been chirping about 92, 93% of the time the pit goes 100 ticks, and as soon as I start chirping about that, it stopped doing that. I still believe that 90 to 100 ticks in this day is still a reasonable target, and while many times it may gyrate around the halfback line, I'm always looking for the next move that might just get us to range expansion. So if you can get 60 or 70 ticks of that move on a couple of contracts in the A to D period, then the rest of the day is just a little easier. I guess the other thing to pay attention to, and I think I position it perhaps a little bit differently than Rob does, is on the 3-period walk. My view is that the very first period of the 3-period walk, be it EFG or CDE or GHI, from my calculations, that first period, I think the smallest probability that it will be the first extreme of that 3-period walk is 75%. So at a minimum, 75% of the time, G in this case, which is a high, that high is what, 60.34 today. That high is going to be the high of the GHI period. And if you would have taken the sell signal at the end of G, boy, you may have gotten 20 ticks by now. So HIJ, IJK, that first period has a exceptionally large probability of being the first extreme. And first extremes are important. A and B will be the first extreme of the day 70% of the time. If you know that, you should be able to 70% of the time understand where the range expansion is going to be. Again, range expansion for me is my bread and butter. It's what drives me in most of my trading decisions. Yeah, I see we've gone five. We're now 5 bars into I. So how I think about IJK is that I is a meaningless period. You're watching it to see what it does in relationship perhaps to GH. I have to tell you it's 4 or 5 bars wide. Doesn't inspire confidence that I'll be making a trade today. I'm looking for expansion of the ranges, and 4 or 5 bars does not make me feel confident that this is all going to work out. As we all know, K has historically been a very strong period. In the 3-period walk, or at least in my stats, K is the second extreme almost 90% of the time. So what I wait for is J to take out one of the extremes of I. And it looks like it's trying to take out the low. Now, since I is the first extreme 75% of the time, while that's high, that's not exceptionally high. J can sometimes be the first extreme, probably just short of 20% of the time. I think K can be the high and the low of IJK 5 or 6% of the time. I don't think we've seen that all too often recently. But as soon as J takes out one of the I extremes, I have an early bias for what direction K is going to go in. But we only had an 18-tick move in I, so it wouldn't be too difficult for J or K to take out both of I. So again, it's a small range environment, and I'm just cautious. And since I've already made my day, I'm not willing to give what is still considered OPM until the close of the business day. It's OPM. After the close, it's mine. So I'm not willing to give back my OPM in a narrow range environment. I was reading something the other day. I don't know if you're familiar with, it's called Bollinger Band Width indicator. Anyway, it's just an indicator that plots the difference between the Bollinger Bands. And it's at a 12-month low, meaning the bands are on a daily chart are as narrow as they've been. So I've been jokingly referring to Jackson Hole, which sticks in my mind because the E-mini S&P 1 year under Bernanke just went nuts after Jackson Hole. So I've paid attention to it ever since. And it's a large economic summit with all the world leaders invited to it, and who knows what happens there. But many times important Fed policy is created there that can shape the direction of interest rates and monetary policy, going forward. So I always mark the end of August as an important date on my calendar. Just so happens that I think we opened the room either during or just after Jackson Hole, and things definitely took off in crude oil in September. So if you look back at the historic ranges, I do believe Jackson Hole last year was an important date. Now, whether that really impacts crude oil or not, I don't know. I kind of doubt it, but that's how I think about it. Anyway, this is definitely a ho-hummer. Sam asked a question about lot size. I trade mostly now 4 lots or 2 lots. I think I closed my eyes and sold a 1 lot today. Trading even lots to me makes sense to me, because you can take off half of your position whenever you take it off, and then create either a break-even trade, which is if you make $200 on your first leg or legs, you then set your stop at $200 above break-even. So if that takes you out, you clearly have a free trade. And that's, if I trade with an ATM, which I don't always do, that's what my ATM does for me, is once my profit target is taken out, it moves me to trade break even. And then as a trade becomes more profitable, it moves to entry. My own personal philosophy is that I'm in it to win it, especially in crude oil, especially in the times of the day that I'm trading. And I believe that just based on my entry technique that I am going to get a runner. So I don't squeeze my trades very much. Trade break even is a fine place to be, and I'll probably adjust that if things change. Well, we clearly have a 5-tick violation of I. That is pretty exciting. We are right near the low of the day, and we're kind of hovering around, I guess, the overnight value area low. Is that right? So we're pretty thick down here. If you look at the TPO chart in the upper left, what do I look for on runners? I don't have any prescribed number. I'm not one that's going to probably get in the 100-tick club, since a hog or pig moment comes to me much before that. I have acquired an ability to enter or re-enter if I'm wrong. But I've been trading to targets mostly, either measured moves or range expansion targets or a key support and resistance level, and I'm very happy to take a large profit. It does not have to be the maximum profit. Again, it's personal. Kind of believe that taking a large profit and not giving much of it back is more satisfying than the times that you get more, but you have to give up $200 or $300 per contract the other times. I've rationalized for myself and my trading personality that I'd rather take profits at a makes sense target to me and be prepared to re-enter. How do you know E be a runner? I'm not sure I understand that question. How do I understand I'm in a runner? Uninterrupted red bars or uninterrupted green bars. And while I don't always use SSTs religiously or to the number, SSTs are a fine way of managing your runners. And if you don't know this already, when the SSTs are printing very close together, the system believes you got a good one on your hands. When you're wondering when the heck the next SST is going to print, that means the conditions are not optimal for a big move. Not that that can't change, but probably not the highest probability to get a big one. Okay, so getting back to the progression, the three-walk progression. Now that I low has been taken out, the clear bias is down. So you wait for a bounce, and you take whatever represents a signal to you. While I was talking in that little itty-bitty I period, I guess we got a gift trade. I did not take that. I can't probably talk and trade too well. But I wouldn't have taken it anyway because I don't trade in small leg environments. So a gift trade, which for anybody who's new, in this particular case would be a series of green bars and green backgrounds into that red trend line. And I think there was a lesson today somewhere. I don't remember exactly what period. I know some of the people in the room front ran the background color change. I hope there wasn't too much damage on that, but that big leg, one of the big legs down before D, caught me who was looking long, but not in a trade. Caught you if you front ran the background color change. So right now we've got a pretty healthy leg here, and there is something inside of me that says an E2 entry might not be a bad place to be. I will note, however, that we've already met most of our upside and downside range targets. So as Rob phrased it some time ago, you're reaching diminishing returns. This is Wednesday, but even my Wednesday day of the week range target has been met. So it doesn't make a lot of sense to close your eyes and sell here. I would wait for a bounce. If you don't get a bounce, you don't have a trade. But that's just the way that I think. How you got into the runner? I just I believe when the pivot was taken out at 80, I sold. So a couple ways of entering that. I think we were looking long at the time. Maybe not. And we had, yes we did. We had, I was thinking long. We had a AB leg that was greater than 20 ticks. We had a green reversal bar that was in perfect position to give you a gift trade, and all we needed was a background color change right there in the middle of E. That's when other people were front running it, and that's not a bad idea as long as you understand there's a little bit more risk in that trade for not waiting for the background change. So I was, as if I was in a long trade, I had all the long chemicals flowing through my veins. And that had just deteriorated through the halfback line, took out that pivot there at whatever that is. Got the pivot at 60.99 and continued down, making E2s along the way. E2 being a wick on the top side of the red candle. My eye was on the next pivot lower, which was 7:34 chart time. I took that out and I entered on a close my eyes and trade and sell trade, which is not my favorite, but there are times when you have a sense that the market is going there and you just have to do it. And for whatever reason, I did it on a single lot. I kind of regret that now. It would have been a lot nicer on more than one, but that's how I entered on that trade. I think I'm working on two different new analysis for me. I'm buying and selling a house. My 91-year-old mother just broke her femur and is in recovery, so my concentration has been diverted at some point, but I'm wanting to revisit the E2 and understanding if with Rob's data we can put some probability stats around the value of an E2. Right around the 20 tick mark, so I think we have a sense that once something moves 25 ticks, there's a pretty good probability of continuation. An E2 to me means that there is a struggle, but that whatever color the bar prints has won. And I don't remember if Rob has any stats on E2s or not, but I walked away from my experience in the room saying that E2 is a continuation pattern, and the existence of multiple E2s increases the probability of continuation. So for myself, I'd like to do my own analysis so that I can feel more comfortable in taking those trades. There are so many of them that observation alone isn't going to be enough for me. You know, an E2 is in the eye of the beholder. To me, it's at least 50% of the previous bar. Others think differently. It could be the top, you know, the top of the brick of the previous bar. You know, I've chatted about this before. My entries are generally at 50% of the previous bar, unless I really want to get in, at which point I'll buy, bid, or sell, ask, or in some cases I'll just go market. But I generally stick my order in at around 50% of the previous candle, the body of the previous candle. If I miss that, I'll have a reversal bar plus a continuation bar plus an E2, so I would then move my order to halfway through the continuation bar that I didn't get filled on. And if I miss that one, I consider myself chasing it, which I don't like to do. So we just got a green reversal bar in J, about 12 minutes to go, but the background did not change. Taking this trade would be considered front-running perhaps front-running the gift trade, but it's also the beginning of a railroad track, which you know, I'm waiting for a better setup personally, but this is the beginning of a railroad track. My entry right here would be right here. My risk would be somewhere above the, will be a close probably above that trend line. Or it might be a printing of a green continuation bar. But If you believe that the trend is down, the trend line is down, you believe the background is red, this is a pretty low risk entry. You also have an SST right here at 97. That might be giving you some resistance. But I personally am, would wait for more of an AB leg. There you go. So now you've got a green background. So now I'm waiting for a red background. Now if it goes 25 ticks, I'm rethinking. Because I do not trade against 25 tick single legs. Okay, I have not updated this recently, but my 3-period walk since March 2nd is averaging 82 ticks. I'm sorry, 78 ticks is the median range. High and high is 26, so 59.50-ish is the target for IJK. Now we'll probably have a conflict here. If we pivot retag into the bottom of the last pivot, which is 14, we're probably going to be over 25 ticks. So you have to ask yourself the question, is the market moving enough for me to get a runner? I don't want to trade for 10 ticks. I'm not going to enter, risk whatever I'm going to risk, and exit after 10 ticks. That's not my plan. My plan is that we're going to exceed the range target, or at least meet it, and that gives me 55 ticks. That is my vision on this trade, that we are going to have a measured move. And the only thing that's going to change that is if we go 25 ticks. Still may take the trade, but we are below the halfback, which is below the overnight halfback. So I feel comfortable that the biases still support down. I guess we're near the overnight low, or making new lows. So if you believe that the range can be expanded further to the downside, it's still a downward biased trade. My feelings will not be hurt if I do not trade anymore today. F period, if you look at F period, Tim, you see how quickly, how fast they printed. SST's printing like that is indicative of a fast-moving, trending market. When you look at, you look at the 4 green bars. I don't know if that's a good example, but there are times when you'll note that price has moved a considerable distance and there is no SST print. And that's indicative of the market not really being ready to trend most times. So that's an indication of what I use, or how I use the SSTs as well. Well, that slope indicator that I think that Brad had, that would be nice to have, I would think, on the trend line. I mean, knowing like in GH and I that it was flat and that it was moving downward would be a nice to have. You know, there certainly is a difference between needs to have and nice to have. And given the resource constraints of Ninja, you certainly don't need to put anything on there that's a nice to have. So I'll take that back. Any update on how well Ninja 8 is doing in beta? Okay, guys, here we go. There is our free trade indicator. Gift trade, rather, sorry. Oops. I took the, I'm short at 99. I missed it. I missed the first one I was talking. So I did get the reversal bar plus continuation bar. I left it pretty close to the open of that first continuation bar. Talking and trading is really hard. That's why I chose to be the guest for IJK, because hopefully I wouldn't care, which I really don't. Actually, trading is pretty hard, let alone talking and trading. Now, my expectations of this with a minute to go is that J will not be taken out. So I will risk above the J, just last J pivot high here at the SST. And I tend to stagger my steps, so I don't take them all off at the same place. I found that you may get picked off on one, but oftentimes not picked off on two. So if you stagger it by a couple of ticks, it's not a lot of money, and you oftentimes save one. Then we have a green reversal bar with a red background, so the trade still has some hope, but this is not the price movement one would have expected. So I am on some level of caution. And this is, of course, an ABC up formation. So we need to take out this green continuation bar, or I think I'm going to close this one. Now, there was absolutely no price movement in our favor initially, so I'm flat. Okay, so now you got to rethink. Well, that was a gift trade that did not work out, and I think that was a good setup. The only possible lesson to learn is that there was no movement in your favor, and why wait for the stop above the pivot to take you out. So I got out earlier than that. So K opened above the J high, and now we have the second highest probability, which is the J will be the first extreme and K will be the high of the IJK period, which isn't going to take much. It's almost there. So 59.80 to 75 ticks will put us at 60.55. Now, without a pullback, is there enough opportunity for you? I'm not sure. Now, I personally have not been a big fan of IJK lately. So the question you have to ask yourself is, do you want to take a long from here into the halfback? The pivot at I and the one in G have to be taken out in order for you to make any money, and those are pretty high volume areas that might be defended. It's not a trade that I will take. So this is a gift trade against the most recent predominant trend. So all right, we have now taken out the I high though. So again, the average range for IJK, which hasn't been updated in a couple of weeks, is 78 ticks. It's the median, I should say. So 60.55, 60.58 would be a target. That would be right into the halfback, which could happen. We've also just exceeded CD is greater than AB. Well, there goes. K is now the second extreme of the period. If you believe E2 is a continuation pattern, there is an E2 in the previous green bar. Guys have moved to heavy metal now. I think the point Rob made is worth repeating. We've already exceeded most every range target for the day. So looking for downside probably came with less probability than if we hadn't. It's just that IJK has been more disappointing than it's been exciting, although we did have a nice one the other day. It's less predictable and gives me less confidence. This is the start of a railroad track. Green background. This is the entry. You can risk 5 ticks. A printing of a red continuation bar will get you out. This is a gift trade in K. The second most probable progression favors higher prices. Every minute is down, but the 3K is up. This might be considered a key reversal day on daily charts. A lot of mixed signals. Mixed means sidelines for me. I also measure the size of the swings. In the downswing, I guess technically it wasn't the first gift trade. It was a gift trade 2 that we failed at, but the range was certainly less than average. So I'm not happy about taking a small loss, but it was a small loss. And I think the setup was proper. So let's move on to the next one. Now, if you had any questions about whether you like this trade, we're going into railroad ties, which is my signal for exit stage right. I think there's probably some edge in a railroad tie once you get into the 5th and 6th one, but I haven't spent any time trying to figure that one out. I'm an old dude, Scott. Rocky and Bullwinkle. Garfield Goose. Was Garfield Goose a nationwide thing, or was it just Chicago? I've been trading for an awfully long time as a hobby. I used to have a commodity trading journal, whatever it was. I used to have them mail me the paper charts every week. That's how old I am. I've been trading full time for about 7 years. And it is the perfect business. Not a significant amount of capital, no employees, great hours, more holidays than you want, great trading hours, don't have to commute to work. The list goes on and on. I am the envy of everyone I know, except none of them want to do it. Now, the number of screen hours you need is immense. So to go from a flat-footed standing start to making money, I've tried to help some flat-footed people, and it's hard to do, at least for me. I guess you just have to have an interest and a willingness to study and read and look at squiggly lines all the time. I would not trade this. I would not trade this, Scott, with your money. Railroad ties is it's like driving 100 miles an hour on a deserted highway at midnight with no headlights. One thing I do, and I'm not sure I noticed this in many of the trading plans, is I go over every trade entry and every trade exit at the end of the day, just to make sure. And do not forget about the exits. Everybody focuses on the entries. It's all about pattern recognition for me. So the more patterns I can concentrate on, and the more that I can burn into my memory of what was a good pattern and what was a bad pattern, it seems to help me the next time. So the analysis I do every day is study my trades. And after that, I study the trades that I could have made but didn't, and why. You have to understand that it's very hard to recreate the trading environment at the time. You're going to glance at your chart. It's going to take you 20 minutes, and you're going to completely forget about what was going through your head at that point in time when you had all the information that you were going to have and you had to make a decision. Try to recreate that. It's funny how you look back on a chart and forget that it was Wednesday or Tuesday or Monday, whatever day. You just look at the price patterns. You just have to do that, I think. And squiggly lines, Jim, is what my wife calls it. Absolutely, positively, if you could have less than zero interest in it, that's what where my wife is. Actually, there are a lot less squiggly lines on my chart than there used to be. I focus on, I have a couple of filters, but in the beginning of the day, I look at the trend line. I look at the symmetry in the market. I look at how big the swings are. I've come to believe, now I started about 6 o'clock Central Time. And I have period -3 and -2 on my chart. And I mean, if you look at the size of the ranges, the average range for -3 and -2 are really pretty small. So I usually eat breakfast, pop into the trading den every once in a while, but most of my successful late overnight range trades come in -1. But if you are not a fan of the smart price band, which is the cyan and blue line, you need to be. There are any number of iterations that you could use to trade against it. We used to use it religiously at the beginning when it was much slower, and then lost interest in it when it was viewed as too lagging, which it was. But now it's good. I look at the size of the swings. I track every swing. I log into a spreadsheet. So I know what the average upswing is and the average downswing. I know what average of the last five upswings were and the last five downswings are, and I do not want to enter near the end of the average swing. All of which might be busy work, really, but it's what I do. No, I didn't. I didn't even buy a house near Ditka's restaurant. The coach. The coach and the Bears. Actually, I'm not a real big fan of the Chicago Bear ownership, so I am a lifelong Chicago Blackhawks fan. We moved to several places when I was in the business world, one of which was St. Louis. And my boys were in the formative years back in St. Louis, so they're St. Louis Blues fans, which one of them is, after 3 Stanley Cups, and the year we moved back to Chicago, the Hawks were in the finals. My youngest is still a diehard St. Louis Blues fan. Season tickets in Chicago will run you $20,000 a seat. So no, I don't have season tickets. We had season tickets in St. Louis. Yeah, not an especially special K. I also haven't seen these stats in a while, but Thursday has statistically been the best day of the week to trade. I assume that hasn't changed. It's kind of like everybody had a night to think about what was in the report, and normally the market moves in pretty nice swing moves on Thursday. So if there was a day that you weren't going to trade, it probably shouldn't be Thursday. So of note, these railroad ties are kind of stuck right at that big pivot retag zone between G and I. Pivots are something you can't ignore, although they can get pretty complicated at times trying to figure them out for me, especially when they're so close. It's another reason for me not to trade when the legs aren't very big. Well, it was my pleasure. Uh, Sharing is a good thing, so when you have a chance, try to make a difference in somebody's life. So who's up next to do the guest commentary? Again, I can only say wonderful things about Rob. Rob hasn't directly made a difference for me. He's helped me make a difference for me. So just remember, the Holy Grail is inside of all of you. You just got to figure that out for yourself. And I'll tell you, if you can't find the right tools in this room, you better stop trading. I also give a big shout out to under trading as opposed to over trading. I don't think over trading, it's all a personality thing, I'm sure, but if you find yourself making too many trades, you probably should look at that. I've made 5 trades today. Not a great day. I missed a couple of the big moves, but I met my number, and I probably need to make it a bigger number. My wife is suggesting I do. She's looking to retire, so that will change things. That'll require me to go to larger contracts, as she's been mentioning. That's a good one, Paul. That's a good one. I might use that one again. Better to be flat, wishing you were in, than wishing you were flat. That's a good one. Think about it. How can you just focus on whatever you see as the highest probability trades and focus on only doing that? Then after you do that pretty well, increase your size. You'll have a higher winning percentage, you'll have a higher win-to-loss ratio, and you'll be a happier trader. And with that, I'm going to wish everybody a good night and see you on Terribly Terrific Thursday. And I have a call. Could be the wife. See you tomorrow, guys. Hello? It's the wife. Jimmy, guys here. I still have a trade on. No. Could be.